Good morning, everyone, and welcome to the Quantum Leap Futures Morning Leap session for Thursday, March 31st, 2016. My name is Doug McKay, and I am the founder and head moderator of Quantum Leap Futures. Each morning we come together in these morning leap sessions to set up our trade plan for the day, take a look at the market macro to micro, the structure of the market, and then drill down to our trade levels, our targets, and our hypotheses for the day. This is a subscription room, so if you want to come in and check us out, I'll put up my contact information in just 1 second. Before I do so, please read through the disclaimer. Nobody at Quantum Leap is a certified trading advisor. Retail traders we are retail traders operating within a self-organized learning environment. Past performance is not indicative of future results, and any trades that you see in Quantum Leap are for education purposes only. Please trade your own due diligence, your own trade plan, and your own risk metrics. Okay, so yesterday, put up my contact information, quantumleapfutures@gmail.com if you want to come in and check us out. There's no website, there's no blog, this isn't a commercial venture. This is what we do. We do it live every day here in this go-to during the morning session, then trading analysis and trading during the course of the day. If you want to check out more of these videos on YouTube, there's 300 plus days of these pre-market sessions. If you like what I do, follow me on Twitter. And you will need a Skype account. Please send me a contact request at Doug_McKay. I'll be the one from Windsor, Ontario, Canada. All right, so yesterday our main hypothesis was to come down into the 53 to 56 area, find initiative buyers, rotate up into the 64 area, 61 and 63.50, I think were the two targets up there, and then chop around. The second hypothesis was we would go up into that 61 to 63 area, find responsive sellers, come down, rotate down through, and come down and test the range high and fill the gap down here. We kind of had a combination of hypo 1 and hypo 2 yesterday. We did come down, find buyers, and then went up into the 63 area, chopped around up there, and then rotated back down through and came down to the low of 51. We did not close the gap yesterday, so right now we have an island top up here. It's not usually left in closed in one day. Currently we're trading here around the overnight session VPOC, which is overnight session VPOC is 51.25. We're trading around yesterday's VPOC. But let's not get ahead of ourselves. Let's take a look at the news first. Not much reaction off of the GDP and unemployment claims. Expected 0.3 GDP came out at 0.6. Unemployment claims expected 266 came out at 276. So kind of a mixed result. 9:45 we've got Chicago PMI, and then we've got natural gas storage at 10 o'clock, and then basically not a lot of news the rest of the day. Dudley is going to be speaking after hours, so that could be an interesting Globex session to start with. So one thing I like to do every morning is start with the same routine, and I start with a macro to micro approach, taking a look at a simple candlestick chart with the 9 EMA and the 20 SMA, looking for slope and separation and where the trend is being challenged or violated, where we're seeing consolidation. On the monthly, beautiful trend in the last couple of years, and then in the last quarter of the 2015 and the first quarter of 2016, we've had this consolidation, but the trend has been challenged. We're currently trading back above the 9 and the 20. We are back above the year open at 2037.75. Yellen came out all dovish this week, and so currently right now we've got a little bit of a rally going, and the trend is being put back in place with a possible continuation. On the weekly, you can see we've had this parabolic move up on the weekly. We do have a start of a upward trend, but very, very early. On the daily, you can see much clearer, great slope and separation, and prices paralleling the 9 quite nicely, so the trend is intact on the daily. As we move down into the intraday, we had basically consolidation and then move up and then consolidation right now, but we're holding the 9 EMA. We've got slope and separation. The trend is intact on the 4-hour. On the 1 hour, it looked like we're going to start to roll over, and then they move it back up again, and we basically have consolidation with possible continuation to the upside. On the 30-minute, you can see that the start of that continuation is coming in. There's naked cross down here at 52.25. Write that down in your journal. If we get below the 53.75, I'll show you why. That would be the first target I'd be looking for. On the 15-minute, same thing. You've got good slope and separation, getting a little bit of consolidation and a symmetrical triangle here, challenging the 9 EMA as we speak. If they get through that, a move down to the 20 SMA is going to bring us into that 53.75. This 53.75 is going to be an interesting level for us this morning. And then going down to the 5-minute, you can see that we've had this trend up, and got a bit of a cup and handle going here, but we are currently trying to get back above the 9 and the 20 after challenging it, and we're basically in this consolidation area right here in a symmetrical triangle. If you just put a couple looks like they're just breaking out to the downside right now. Possible breakout to the downside is what it's looking for me. I'd be looking for that 50 test of the 53.75. But overall, we're starting to go into consolidation, possible rollover, but most of the time frames are still showing this trend up. Taking a look at the macro structure of the market. Again, we've been talking about this forever, ever since we got back inside of this value area, microcomposite value area from 2008 up to 2086.50. We had this microcomposite LVN and then this Gaussian distribution, beautiful bell curve up here with the microcomposite VPOC at 63.50, the composite VPOC going all the way back to January 1st of 2013 is 61.50. That was our two main targets. Yesterday we got up as high as 64.50, and then we've rolled over and come down and gotten as low as 47.25, which was our target, if you remember, on our second hypothesis. We just didn't put it in until after the RTH in the Globex session. So currently right now we had this balance down here, 1, 2, 3, 4, 5, 6, 7, 8 days of balance. We had a breakout day here, but the microcomposite VPOC is at 40.75. We gapped up, went and hit that next big target at 56.25, went and hit our targets at 63.50 and 61. Responsive sellers stepped in, quite natural. This is what they're going into price discovery to find sellers. Where are they going to find sellers? At the areas where they found them the last time. Rotated down. We've gotten below the 58.25. We're now creating a new little CHVN close to this 56.25 at 55.25. 52.75 is the next CLVN. Only problem with this is that this is pretty blunt right here. not a lot of price acceptance. So, you know, I would be careful taking a short below the 52.75. I would wait for the break of the range low at 51.50. I would rather take the 53.75 short into the 52.75 and 51.75 test, and I'll show you why in just a minute. The next key line in the sand for us is going to be all the way down here at the 48.50. Below the 48.50, then it's a gap fill and a move down into this 45.75, with the next big support being 43.50. Below 43.50, very nice trade, in my opinion, down to the 40.50 and see if we find responsive buyers for another leg up. If we get above 58.25, I would be looking for a move up into the 61.50 and 63.50. I think the big move is probably going to be tomorrow. We are at critical mass, so I'm leaning towards the long side right now, but I'm going to trade what I see, not what I think, simply because of the fact that we're the last day of the month today. Our critical mass was, our month open was 1928, so our critical mass was 2170. Our critical mass was 1952.75, so we're nowhere near that. We're actually 100 points above critical mass right now. So there's not I don't want to say that. I'll say it. There's no chance in the hell that we're going to go and put a negative month in this month. So March is going to go down as a positive month. Do we see capitulation of the bears and the sellers today? It'll be interesting to see. But the key levels today are going to be that immediate one at 53.75, which I'll show you in a minute, and then 51.50, 48.50, 43.50 to the downside. To the upside, 58.25, and then the high from yesterday at 64, I'd be looking for a move to 67, and then the next big target above, which is going to be at 69.75, 70 area. And then above that, it's probably going to be 80 and then 86.50, 86 area. So let's take a look at what's happened overnight. Our overnight high right now is 57.50. Our overnight low is all the way down at 50 or 47.25. Just one tick below that naked close. Our VPOC has shifted back up. So our overnight VPOC is basically right on top of yesterday's VPOC. So we are accepting value higher right now, accepting this 55.75. It was down here earlier at 51.25. Now it's moved up. We've created a double distribution. And what's the number that separates the double distribution? 53.75. So that's why I'm watching that 53.75. It's also just below the value area low from yesterday, which is 54.75. So I'm putting a trade area in here that will encompass both. So I want, for the long side, I want to be above the 54.75, into the 55s, into the overnight VPOC and yesterday's VPOC, which are basically sitting on top of each other. Below the 53.75, I want to target that 52.75. And then I can look to accelerate below the 51.50 low from yesterday. And then targeting 48 range low from the RTH session, and I'm sorry, the range high from the RTH session on Tuesday, and then the naked close and the overnight low at the 47.50 and 47 and a quarter. Below that, 45 is I'm going to change this. I'm not going to put the, well, the target is 52.75 to get funded, but the real target is going to be this HVN here from last night at 51. So I think they get through that 52.75 if they can't hold above the 53.75, and this looks like it's going to happen before the Globex session ends. Nothing else I really need off of the overnight, so we'll just move that out of the way, expand this out, and start putting our hypothesis together. All right, so you have below the 51, there's the 49.75. I really think that 48 is going to be the immediate target with the overnight low there. 45, the 42 is going to move to 43.50. And then the MC VPOC target remains the same. This is a year open, but it's not going to be with this. Off of the high overnight at 20.57.50, our 20-day ATR is running 21.70, and that puts our daily ATR target down at 20.36. Our year open is 37.75. Below that, we've got 34.50 as a target. That's that older VPOC. I'm actually going to use 34 because the 34 was this one right here, and then we had the little one in the middle of the distribution here at 34.50. But I think 34 is the more prominent one. And then some support coming in at 32.75. And then below 32.75, I've been looking for a return to the scene of the crime on the Yellen speech down here at the 26.75 and 25 with that 3-day microcomposite, the last place before they launched, and the naked VPOC, 22.19, and then our key support down here between 16 and 17. Remember that this is the microcomposite LVN that we were watching for a launch all the way up into the 61 area, that composite VPOC. To the upside, if we hold the 53.75, look for 55s and the overnight high getting taken out at 57. 58 and a quarter will be first point of resistance. It's the midpoint, the VWAP, the VPOC, and the LVN. I'm sorry, not the VWAP, the midpoint, the open, and the CLVN, and then above there you got clear sailing, and I would target to the 61 and a quarter, the 63.50. And you can see that the composite VPOC, I have to move this to the back. The composite VPOC is the value area high and the one standard deviation of the VWAP from yesterday. So this is going to act as a major magnet once we hold inside of the value area, which we're doing right now. So if we hold inside the value area and fail to go down and break out of yesterday's range, then I'd be looking for the 80% destination trade back up, and I think you're going to get better than 80% probability on it, simply because of the fact that this is going to still act as a major magnet because of the fact it's the most traded price. And if we don't break out a value, they're going to go and advertise price to the sellers up into that 61. If we get up here and accept the 61 and get above it, look for them to push and extend the range above 64, 63.50 being the target. That's the microcomposite VPOC that was just taken out, the naked microcomposite VPOC yesterday, taken out, but it's still the most traded price within this value area. Look for them to test the 64 and either fail and come back down into the 61 and a quarter and back into value, or extend the range, target the 67. The big target is, next big target above is the 69.75, and the this is going to shift so I can get this out of the way. 69.75 and the 71 and 72, this area up here. I expect to find responsive sellers once we get up to this area. Based off of the low overnight of 2047 and a quarter, our 21-day average is 2170. That puts our daily ATR target just below this at 69, I'm sorry. So a lot of cluster up here. And then there's, if we get above this area of 71 to 72 and a quarter, there's nothing there. It's there's really nothing until, I think, you've got the 77.50 value area high from this microcomposite centered around the 69.75, but the next big one is going to be this 80 and a quarter. And then above 80 and a quarter, it's all about this 86, and above the 86, that's the microcomposite value area high. Above there, I'd be looking for a weekly ATR target to get taken out. We did not take out the weekly ATR to the high side or the low side yet. Looks like it's going to be an inside week. So we could just simply balance here and chop around. My main hypothesis is a move down to test the gap and possibly get into the gap, go down, close the naked close, and take out the overnight low, find responsive buyers down here, and rotate us up through into the 61 and possibly get expansion up into that 69.71 area. That's hypo 1. Hypo 2 is to come up into the 61, 64, have a false breakout, fail somewhere between 67 and 69, and then rotate back down through and chop around, and testing the gap, but not actually getting into the gap. Hypothesis 3 is that we find responsive sellers right off the gate, go down and fill the gap, try to bounce to come back, fail, and then move down towards this 40-50. And I'm actually going to put a fourth hypothesis because this is how uncertain this area is. My fourth hypothesis is we simply go up. We hold the range low from the prior day. They rotate it up, and they just keep drifting all the way up into the 72 and possibly even into the 80 area, and we get a continuation day. I think that's a lower hypothesis. The range has been tightening, so I really think that we're we're going to get a bit of a move and then go sideways and then drift in the direction of the initial move. So again, my initial hypothesis is to come down, find responsive buyers below, and then rotate up through into the 61, 64, and test these areas up here at 67, 69. Second hypothesis is basically reverse of that with a move down to close the gap. So that's what I'm looking at. Hope it's pretty straightforward. If there's any questions, please post it in the room. I'm trying to cover a lot of ground. Our current Keltner center line is sitting right here at the 54.50. If we hold above it, a move to the upper Keltner will take us up into the 59 area. Test the, more likely by the time we get there, it's going to be 61.25. Break below will take us down into a move of the 49, most likely down to the 48, 47.50 area by the time we get there. So that's what I'm looking at. As always, trade well, trade safe, and we'll catch you on the flip side.